Hello and welcome to Fin24. With the focus on Savings Month being alternative savings, we've decided to look at Sharia compliant savings. Sharia compliant products is something that we've heard of, but not something that we understand completely. With us in studio today, we have Abdulaziz Davids. He's the head of research at Kagiso Asset Management. Welcome, Abdulaziz.
Shukran. Thank you very much.
Abdulaziz, Sharia compliant is a term that we have come to hear of in the financial circles. Some of the bigger, more conventional banks are even offering Sharia compliant products. Right. But very few of us actually understand what a Sharia compliant product and specifically a Sharia compliant savings product is. Do you just want to delve into that a little bit and just explain to us exactly, clearly, simply, what is Sharia compliant?
Yes, thank you very much. I think one of the key issues with Sharia compliant is to take the name Sharia and just unpack what that is. For many Muslims, they would be very familiar with the term Sharia. And Sharia is a set of laws and regulations that govern a Muslim's life. So many of us and many of your listeners and readers would be familiar with the concept of praying and going for Hajj, for example. So that is a subset of Sharia law and Sharia regulations. What many people don't realize is that investing and there's a whole body of laws and regulations around how people should interact, how they should have business dealings, etc. And that encompasses Sharia compliant investing. So similar to the incumbency of praying and going and fasting, we just came out of the month of fasting, and as many of our people are preparing to go for Hajj, a pilgrimage for example, Sharia compliant investing is a very important branch of the whole Sharia law as well.
There seems to be a lot to do with interest around Sharia compliant savings.
That's right.
Can you unpack that a little bit more?
So just expanding on that a bit more, Sharia law in itself basically governs a Muslim's business dealings, and in Islam and in the religion it actually prohibits the taking and receiving of interest. So if you boil it down to its core essential, Sharia compliant dealings and investing essentially means that Muslims or people that invest in Sharia products are prohibited from either receiving interest or paying interest. And hence what we do as Sharia compliant product providers is look at those investments and companies and various type of other investments that minimizes or completely eliminate the receiving of interest, because clearly you as a saver, you're receiving potential income. And similarly for the companies that we invest in, they are not allowed to pay excessive amounts of interest. So the amount of debt that they take on is also limited as well. So in essence, effectively what we're talking about is the prohibition or total elimination of the receiving or paying of interest.
Okay, so then the question would be, if a Sharia compliant product does not accrue interest, how does the investor then make money? How does the product then yield results for somebody who's investing in a Sharia compliant product?
Very important question, and I'll try and keep it very simple and in layman's terms. Effectively what we do is we would take investors' money, we invest that in companies largely listed on the stock exchange. So many people have this fear of a stock exchange and it sounds very fancy and complicated. But in essence, if one looks at most of the companies that we are either exposed to or touch us in our daily lives, if we look at many people have a cell phone, for example. So Samsung, MTN, Vodacom, these are companies that many of our people will be familiar with. Those companies are listed on the stock exchange. What that means is that every year when they make profits, they pay those profits to their shareholders. Similarly, when we take our investors' money, we invest in a company like Vodacom, for example. We become a shareholder in Vodacom, and by default, our investors become shareholders in Vodacom. So the way we make money, and to answer your question, is effectively in two ways. Firstly, by buying the Vodacom share and then selling it at a higher price in the future. That increase in the value of the Vodacom share is our majority in terms of how we make money for our investors. The second part of or bucket in terms of the return for our investors is the dividends that Vodacom pay. Vodacom is clearly a very profitable company. Every year, the financial year, they decide how much profit they've made, and from those profits they pay a dividend. That dividend accrues to our investors, and that's an additional income stream for our investors as well. So in summary, effectively how we make money for our investors, and you've noticed that I haven't mentioned interest at all. So clearly it's from capital profit by buying and selling, buying low and selling high at a higher price to share. And then also the second component is the dividend that we receive from a company like Vodacom, for example.
There is also the perception that Sharia compliant products perform poorly compared to any conventional fund. Is this true?
We would like to dispel that myth, because clearly in many, and we've conducted roadshows over the last 7 years since we've launched our fund, the immediate pushback that we get from potential investors is they say, yes, it's important for us to invest in a Sharia compliant manner, but actually we think that you're going to be inferior in terms of your profit generation or your returns, for example. We've done an exercise, and I mean I can quote you numbers that we don't have to take a back seat for any conventional fund out there over the last 7 years. And that's despite the fact that, you know, our market is divided between industrial companies, mining companies, and then financial services companies, so the banks and insurers. So Sharia fund is not allowed to invest in the banks and the insurance companies, for example. So that's a sizable part of the market that is totally prohibited. But despite that almost hindrance, we've been able to generate substantial returns for our investors, much more so than many conventional funds as well. So our investors and potential investors can be rest assured that investing in a Sharia fund is not going to first compromise on returns, and secondly is not going to generate lower or inferior returns compared to conventional funds as well.
Something that also we have to touch on is the fact that within the Muslim community, traditionally, culturally, we find that children, adult children, seem to be looking after their elderly parents.
That's right.
How does one then look at the saving of these adult children? Because surely now, whereas ordinarily you would be saving in a retirement fund at work for yourself and your spouse and your children, in a Muslim household, in a very traditional Muslim household, many parents are also now being looked after.
Yeah.
Should these young Muslim adults then be saying, I should be investing more, I should be investing differently, I should be diversifying my investment
That's right.
in terms of Sharia compliant products? What should a young adult Muslim person, who in all probability is going to be looking after their parents in their old age, what should they be looking for in
Yes.
funds?
Very important question, because clearly the mindset unfortunately today is that many of our young people, they say, I'll start when I'm 40, I'll start when I'm 50, it's a long-term decision, I can defer it. The reality is that inflation and the cost of living is a reality for us, for many of us today. And there's been numerous exercises and studies that have been done that to say that even if you delayed by 10 years, the difference in potential returns is massive on retirement. So the sooner you start, the better. The second point, and very pertinent, as you said, to the Muslim community, is that you're not just saving for yourself, for your wife and your kids. You're actually saving for, you know, extended family as well. And hence the great importance that needs to be put on putting away sufficient amounts of money for that rainy day and for the future as well. And unfortunately, culturally, we know that many young people, they're in an accumulation phase of their life. You need to have the latest car, the best house, etc. But what we would advocate is every month be disciplined and allocate a portion of your salary and put it away in a savings vehicle. Many of our people have the luxury of, and I call it a luxury because the retirement savings net is not that massive in relation to the total population, to have a contractual savings arrangement with the employer. But many of our people are also entrepreneurs. They've got their own businesses, they informal traders, for example. They need to be educated in terms of being disciplined, at least to put away 500 Rand a month.
To get into a savings mindset.
To get into that savings mindset and culture and the discipline as well. Because what you'll find is that regularly contributing 500 Rand a month, over 10, 20, 30 years, it adds up to a massive amounts of saving. Unfortunately, the reality is many of our people in an emergency, when they come to 50, 55, they become beggars. And that's unfortunate because, you know, a guy's been working for 20, 30 years. Now he loses his job or the business is not doing so well, he doesn't have a safety net. And that's why it's important. We talk about savings in the context of, you know, surplus funds. But the reality is you need to allocate some of your budget and you need to allocate money for that savings, even though you might find that you believe that you don't have sufficient.
So savings should be a part of your budget?
100%.
And
just as you spend money on airtime and telephone, you need to allocate that amount for your savings as well.
And then also, if you find somebody working for a large company that has a retirement fund, that has a pension fund, is the option there for the employee to go and speak to the employer and say, I would like my portion of retirement funds or my retirement to be invested in a Sharia compliant product.
That is so vitally important. The reality is that many of the funds today, because funds are structured in what they call a defined defined contribution structure, it effectively means that you as the employer or the employee, the contributor to that fund, you can set how much you contribute on a month. What you get out at the end of the day is unknown. And that's subject to the vagaries of the market and volatility and all of those things. But very importantly, most retirement funds and pension funds today, they've got what we call member choice. So you have as a member, you've got the choice and the power to say where you want your money to be invested. And the reality is that for many people, they might not know this, but if you're a Muslim and you've been saving for 20, 30 years, your pension fund is in a conventional structure, chances are that a sizable portion of that money that you'll get on retirement is actually not permissible for you, because there would be massive amounts of interest that have been accruing. There might be investments in liquor, in gambling, etc., which wouldn't have been allowed for you for that 20, 30 years. And unfortunately, when you need it most, and people will need it when they retire, there's a sizable amount that you almost have to give away just to sleep, with a clear conscience at night. And
so
that's a
it
dilemma.
always comes back to starting out, being proactive early in your life with regards
avoid
to
all of that. Avoid all of that by investing prudently and in a Sharia compliant manner at the beginning. Because like I said, you don't have to stand back in terms of the return. You're comparing maybe a 10 million rand payout on a conventional fund versus a 10.5 to 11 million rand payout on a Sharia fund. But that Sharia fund is full 100% permissible for you. Whereas that 10 million that you'll get on a conventional fund, there might be 5, 6, 7 million rand that you'll have to give away because you're not allowed to consume it.
But I think something that you've dispelled here today is the fact that the returns on a Sharia compliant fund are less than what it is in a conventional fund, because I think that is often what scares very many people. People want to make as much money as possible for old age. They want to know that they are secure as possible for their old age. And I think it's very important that we now know that a Sharia compliant fund is not in any way less viable than a conventional fund.
That's right.
So, in conclusion, is there space in the market? I think we have answered it, but just is there space in the market for Sharia compliant products? And the financial markets as they stand, are Sharia compliant products growing? Is it only for Muslims? Are we finding that only Muslims are investing in Sharia compliant products? Or is the concept of a Sharia compliant product growing?
Yes, very important question. And our market research, when we launched our fund 7 years ago, the entire universe of funds available, the total value of those were about 2.5 billion rand. Today, just what is currently invested is sitting at about 13 billion rand. So it's grown by about from 2.5 to 13 in the space of about 6, 7 years. And alhamdulillah, that growth has been very good. The reality, though, is that we know that anecdotally from the surveys that we've done, etc., that the wealth out there is potentially running in 40, 50 billion rand. So there's a huge potential untapped market out there where people are either they need to convert from conventional products to Sharia products, or the money is just invested elsewhere. It's invested in properties, invested under the mattress in the bedroom. So there's a potential much bigger market out there compared to the 13 billion currently invested. So we believe that the Sharia market will continue to grow and grow much faster than the conventional market. In addition to that, there's clearly the capital growth that you'll get from your investment today. So effectively, you get growth on growth, but the beauty of that is all in a Sharia compliant manner.
Okay, so I think what we've learned here today is that Sharia compliant funds are not inferior to conventional funds, and that people really have to start becoming proactive and saving as early as possible.
That's right.
Shukran and thank you, Abdulaziz.
Thank you.